Now, thinking through the pickup in central bank gold buying, you referenced like on average, call it 1,100 tons rolling 12-month average for the last maybe year and a half, right? Have you seen similar activity in institutions? And you referenced 75% holdings maybe being the mean. A long time ago we've trended down to 20% holdings for central banks to own gold, and maybe you're forecasting your projection back up to around 40. What's the mean with institutional money right now, do you think? Is there a larger appetite to increase exposure to gold in tandem? I think about sort of the flow of the smartest, most conservative money down to the retail investors. The central banks are the slowest to move, the big super tankers and the most conservative, right? Who's next in line to pick up that trend?
I think when it comes to institutional demand, one issue that I have is I think that gold has some sort of a marketing problem. And gold is being regarded as something useless, something kind of dirty. And I think we have to change the perception. We have to deliver a positive case for gold. We have to make sure that most of the companies, especially the listed companies, are doing a tremendous job when it comes to ESG. But I think the reason why Newmont, for example, took over Newcrest is primarily because they've got all their growth in the copper space. So I think that the large institutional players, they're so driven by ESG. I think for them, it's really tough for them to really buy into gold because it's something that is definitely not the zeitgeist.
Because there's no narrative right now, effectively, is what you're saying. EB, what's missing from the narrative? I mean, you authored a book essentially on this.
Everything. I mean, I always encourage people to do surveys. When I go to dinners, and I'm always asking people what they think about this and that, and I'm just generally curious, and nobody is positive about gold. I mean, if I take a coin with me and show it to people, they've never seen a coin, they've never held a coin. What do you do with it? Wow, it's very cool, but what do you do with it? It's not in the. Everybody that was in the 70s bull market's either dead or eating pudding in a nursing home. I mean, it's over. And so. The new generation, I mean, they're not into it. It's not happening. And I don't know how you change that, or I don't know if you need to always change that. I think we can see that when there's a breakdown in trust, that's when people go looking for something, and we'll see what they look for. But I don't know that there's going to be many options. And so we sit here and we look at this thing that makes all the sense in the world, and then it just sits. I mean, in the US, very few people that own gold actually physically have ever even seen it. Even if they do, best case scenario, own it, it's via derivatives trade. It's options and different exposures like that. There's very few people that think, let me get a bar of this stuff. And so the bulk of the gold trading, in a day, normally in the futures market, half of a year's supply can turn over in one day. And none of those are physical ounces. So we live in this weird bifurcated world where we have a small industry that's got a gigantic financial, building on top of it, and that's how it works. And I'm not sure what you do to change that, except why not have the real thing? If the real thing is right in front of us, the case is just buy the real thing and don't worry about it. But grinding it out in the business is tough.
Quick break here. This episode is brought to you by West Red Lake Gold Mines. Now, if you know nothing about West Red Lake Gold Mines, let me tell you one thing. This company was founded on the back of a transaction where they purchased the Madsen mine in northwestern Ontario in an area called the Red Lake Gold District, which to date has produced around 30 million ounces of gold from some of the richest gold deposits in the world. Now, what they paid for this mine versus what they got has led legendary mining entrepreneur Frank Giustra to call this transaction the deal of the decade. And Bob Moriarty, founder of 321 Gold, was recently on my show calling West Red Lake Gold Mines one of the two most undervalued gold companies in Canada. If you're curious why these individuals are so excited about West Red Lake Gold Mines, hit the link below to learn more. Now back to the episode. And what is the utility? I mean, I hear this a lot, like we got to change the narrative around the gold sector. I tend to think the narrative will change when the macro changes. Like people will, they'll buy the asset that makes the most sense. And quite frankly, I've met probably 20 kids at this show today that are under the age of 18. And they're here because they know that things aren't making sense, and they're curious about hard assets for that reason, right?
They're looking for the Bitcoin show and they got lost. Yeah.
They took a left.
Yeah.
They should have taken a right. Yeah, maybe. What's your take, David, on the utility of the everyday retail investor? What is the case for gold in the portfolio? And what might you think about in terms of breakdown from owning some physical, how much and why, looking for exposure to the equities which give you that torque, how much, why, and how?
Look, I do think gold still has relevance in society. It's the one currency you can go to any corner of the world and people understand the intrinsic value. They certainly don't understand the intrinsic value of paper currency or cryptocurrency. If you go to the deepest, darkest jungles of Papua New Guinea, for example, gold is recognized as having deep intrinsic value and has for thousands of years. And I think younger investors understand intuitively that their fiat currencies are being undermined. That's why cryptos captured their imagination. Plus, you can buy it on a smartphone. There's a digital token that's very easy. And listen, I have 8 kids, and they're all on their phones all the time. Their world is in their phone. So cryptos capture their imagination for that very reason. But gold can do so as well, and still is recognized for its intrinsic value. So I do think it is relevant. I think it's very, very important, and it's a means of trade. It has utility. It has value, and it provides a rational way to trade goods and services, and more than any other currency, and for longer than any other currency in the world. And that's why I think it's still relevant. As to where you get torque, I'm concerned about the producer universe. I came into the gold business in 1998 after having spent about a decade in base metals, and I joined Agnico Eagle. And it's interesting, the producer universe looks pretty much as it did back then. Barrick and Newmont were at 5-6 million ounces of production in 1998, and that was suboptimal, and they couldn't sustain it. Here we are 26 years later, they're still at 5-6 million ounces. They can't sustain it. The only thing that's changed is their share count's gone up exponentially. Their production hasn't. So all the industry's been able to do is basically cannibalize itself.